Guys, this is S&P 500 Technical Analysis for the week of November 28, 2022. That is from November 28th, Monday to December 2nd, Friday. Now, a very significant thing that has happened in the stock market, particularly in the S&P 500, in the recent week, okay, and that was the closing of the candles. In my previous S&P 500 technical analysis, I mentioned this thing that consolidation and breakout. So earlier the S&P 500 was in consolidation because of the Dow Jones that I've clearly explained in the previous S&P 500 technical analysis. So we were expecting a breakout on this particular day, the FOMC, the Wednesday. However, the FOMC on Wednesday, it was confusing, it was not clear, and that was the reason the market, means the stock market, the S&P 500, it failed to get any specific breakout, neither bullish nor bearish. And that is the reason we are seeing that the closing of the S&P 500, it is here, it is just here. Now it is very significant because it failed to cross the zone of 4035 that I mentioned in my previous S&P 500 technical analysis. Because the zone of 4035 is critical to the S&P 500. This 4035 can form a lower high, means a bearish reversal from this zone, or this zone of 4035 can give a push, a bullish push to the S&P 500. So in this S&P 500 technical analysis, we are going to discuss the zone of 4035 once again, because Monday is the critical. Monday will be critical. So on Monday, the fate of the S&P 500 and the entire stock market will be decided whether it is going to move up or it is coming down. This thing will be very clear on Monday. Now, other than that, if you see that this was from the previous S&P 500 technical analysis, and if you notice, I mentioned that, see, because the S&P 500 is in consolidation because of the Dow Jones, it was the Dow Jones that was responsible for the consolidation. So I mentioned that the S&P 500 is in consolidation because of the Dow Jones. This means that it is range bound. It is range bound. Range bound what? It is from 3907 to 4007. Now the day it breaches the 4007, that will be most likely, or more than 90 to 95%, that will be Wednesday. Wednesday on when the FOMC will be out. And if you notice, this was Wednesday. This was Wednesday. On Wednesday only, it was able to breach the 4007. What was 4007? It was 61.8% of the Fibonacci retracement level. So earlier, the movement was confined. It was constrained in between these two levels, 3907 and 4007. Okay, this was there. This was very clear. On Wednesday, there was a breakout. Not actually a breakout. We can call it a breakout because of the trend line. But because of the FOMC, this breakout actually it did not happen. It did not happen. And that was the result was seen on Friday. On Friday, a very small candle, thin candle. So in my pre-market update to my YouTube community members on Friday, I mentioned this thing that on Friday, the stock market will close at 1 p.m. Eastern time. This means that a lot of traders might not be trading and they are already enjoying the long weekend, Thursday, Friday, Saturday and Sunday. This means that the volume from the retail traders is expected to be low because people, they are not trading, right? So what we knew about the movement, we already knew in advance that because of this thing, either the S&P 500 will remain dull sideways, it will give a sideways movement, a dull movement, or it may try to move up. Only these two conditions. Chances of seeing a downward movement are very low as compared to the sideways or the bullish movement. So what we have seen that for the entire day, the movement of the S&P 500, it was dull and it tried to move up. So this condition was fulfilled as is. And other than that, what we wanted to know or what we wanted to see that when the market tried to move up, it will find initial resistance at 4022. What was 4022? It was the 200-day EMA. And then the zone of 4035 itself. That's it. That's it. This means that any upward movement was limited to 4022 initially. 4022. So 4022 was acting as a resistance as well as support. So because the open of the S&P 500 was above 4022, so it came down, it found support, very good support at 200 week moving average. Then it moved up to what? To 4035. However, it failed. It failed to even enter in the zone. But not the enter, but it failed to breach the zone of 4035, and this was the second rejection from the zone. This was the second rejection. So in this S&P 500 technical analysis, we are going to talk about these the rejections, this the failure, this the FOMC, why with this the FOMC, the S&P 500 and the entire stock market it failed. Other than that, the most important thing that we are going to see here is the Dow Jones. Dow Jones is now trading on the critical levels. So when I say the critical levels, let me show you here. If you notice that the divergence is almost like it is more than 67, and if you notice that on August 16th, the divergence was 67.75, and from August 16 onwards we have seen this the downward movement, this a very heavy downward movement, and now we are already on this particular junction. So this the August 16th, okay, and this the November 25th, okay. The technicals are saying that they are on miss, technically S&P 5 technically Dow Jones is trading on these the absolute, these the saturated levels. Other than that, we have seen the same thing on November 8th 2021. Okay, 1 year, it's been 1 year, November 8 2021, it was this one, it was 66.67. this means that the Dow Jones is already trading on the critical levels. This means that Monday is going to be a decisive day. So in this S&P 500 technical analysis, we are going to discuss all of these things. What will happen on Monday, how the Monday is going to impact, whether it is going to move up, means the Dow Jones and the S&P 500, or whether the S&P 500 is going to come down. So all of this we are going to talk about in this particular S&P 500 technical analysis. And on the daily basis, I am giving these the updates, these the pre-market update, the final update, the first, second, third, etc. all of these updates to my YouTube community members, so that they are aware of all of this, the situation, what is happening, what is going to happen. For example, I told them on Friday that either we are going to see a dull movement or it will move up. That's it. But the upward movement will be limited to 4035. This means that the movement was supposed to be constrained between 4022 and 4035, and it was exactly, it was. So this is how I help my YouTube community members. I give them the analysis, the daily analysis of the S&P 500. I tell them that what is going to happen in the stock market today, what is going to happen in the S&P 500 today, and what will happen in the Dow Jones and the Nasdaq today. So guys, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then I have given the link in the description of the video and also in the comment section. Now guys, let's discuss the agenda of this S&P 500 technical analysis. So in the agenda, the first thing is that we are going to discuss the S&P 500 technical analysis on the weekly chart. So I will tell you that what is happening on the weekly chart. Weekly chart means the big picture. We will see that what is happening in the S&P 500 as well as in the Dow Jones. See, although we are talking about the S&P 500, but we must not forget that whatever we have seen recently, okay, this is a very heavy upward movement. It was caused by the Dow Jones. That is why we need to look into the Dow Jones to see what is happening in the Dow Jones. And there is very interesting thing on the weekly chart of the Dow Jones. On the weekly chart, the Dow Jones is going long-term bullish. That is the most surprising thing, the most important thing. So we are going to talk about there. So on this the weekly chart, okay, so I will do the S&P 500 technical analysis on the weekly chart as well as the technical analysis of the Dow Jones on the weekly chart. That is again very critical. So we will look into this the big picture, whether it is bullish, bearish, okay, the trend. Then the second point of this the agenda is the FOMC, inflation and the breakout. So we need to see that what was there in the FOMC and why it was confusing and why it failed to give any good movement to the entire stock market and to the S&P 500 and to the Dow Jones and the Nasdaq. Okay, so this is the failure here. Then the inflation and breakout. So why the FOMC? This is the FOMC thing. It was impacted by the inflation, and why the Feds are still concerned about the inflation, why they are not sure about the inflation, and then a potential or the possible breakout, right? So guys, thereafter, yes guys, so there is one more thing, that in the coming week on Wednesday, the Chicago PMI data will be out. Okay, PMI means the manufacturing. So earlier we have seen that the manufacturing, okay, it was down. It is coming down continuously. Okay, so that is indicating that the manufacturing sector, okay, it is not performing well. It is not doing any good. So this means that economy is slowing down. So we will be waiting for this on this the Wednesday the Chicago PMI data, and we will see that whether the economy is further slowing down or whether it is holding. because if the economy is further slowing down, then that will be again a bad signal, the bad signal for the overall the stock market, not just for the American stock market, but for the global stock market, right? And also on this the Wednesday, the Fed chairman will participate, okay, in I guess in this the press conference. So he will be speaking about or he'll be talking about the same economy, the Fed policy. So Wednesday again is going or it will be, very very significant, very this is the important day. Wednesday, it will be November 30th. So on this the November 30th Wednesday, okay, we will come to know number one the PMI. Then after the PMI is out, then the press conference of the Fed chairman. So that will be very very important. Other than that, on Thursday, there will be the PCE and the core PCE data. So PCE and the core PCE data, it is an early indicator to the CPI data. Okay, and we will also see that what the Feds are saying about the PCE and core PCE in the FOMC. So we will go through this FOMC and we will see that what was happening and what is happening and what will happen, right? Then let's talk. So then we will talk about the S&P 500 support and resistance levels. As you know that my support and resistance levels are very very sensitive, and as of now, okay, as such you will never find that there is something like 4035 in any of the technical indicators. But this 4035 is my calculated. This is the support as well as resistance level. So the market, the S&P 500, it failed to breach the 4035. Okay, and that is the point of concern. So that is indicating a reversal. So we need to see what are the possible these factors that can cause a reversal, and what are the possible factors that can give a breakout in the upward side, okay, in the bullish side. So I will tell you the probable movement of the S&P 500 based on the support and resistance levels. Other than that, last week also I told you that the movement will be confined to 3907 and 4035, and it was for the entire week, it was confined between these two levels, 3907 and 4035. So similarly, okay, I will tell you that what we can expect in the next week. Then guys, there is this the dollar index, bond yield, and the profit booking. So because of some of these the factors that are there in the market, in the stock market, we are going to see a probable profit booking in the Dow Jones, and that profit booking in the Dow Jones will it is going to impact the S&P 500 and the Nasdaq and the entire stock market, not just the American stock market but the global stock market. Okay, so we are going to see this the profit booking, dollar index, bond yield, and the profit booking, right? Then I will discuss the point number 5 of this of the agenda of this S&P 500 technical analysis. So the point number 5 is of this agenda is the S&P 500 technical analysis on the daily chart. So I will tell you that what is happening on the daily basis on this the daily chart in the S&P 500, whether it is doing okay like bullish, whether it is going bullish, whether it is bearish, and what we can expect from the S&P 500 in the coming week. Okay, so that will be a technical analysis on this the daily chart. So as of now, what we know is that on the daily chart, the S&P 500 is in short term bullish trend. Okay, but we need to see again that whether it is holding or whether it is going to give up. Okay, then finally in the point number 6 of the agenda of S&P 500 technical analysis, in this the point number 6, I will tell you the probable movement of the S&P 500 from November 8th Monday to December 2nd Friday. That what we can expect from the S&P 500 and from the Dow Jones and the Nasdaq and the entire stock market in the coming week, whether the stock market will move up or whether the stock market will come up or whether the stock market will come down, or it is moving into the consolidation, because we must not forget that in the mid of the December there will be a center rally. Okay, so it is there, okay, always like at the end of the year the center rally. So before this the center rally, what we can expect from the stock market? So this is again into this the picture, the consolidation. The consolidation was there earlier, okay, for more than a week. So we will again discuss this the part of the consolidation. Okay, that is again there are chances that we can see this the consolidation in the entire stock market, right? So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community in order to get the daily analysis of the S&P 500, then I have given the link in the description of the video and also in the comment section. So now guys, before I proceed further with this, the point number 1 of the agenda, I want to clear this thing that this technical analysis is not a financial advice in any form or in any manner. This S&P 500 technical analysis is not an advice to buy or sell in the stock market or to place your orders or trades on a particular level in the stock market. And also guys, whatever profits and losses you are seeing in the stock market, these are all yours, because I do not know how you are going to interpret my S&P 500 technical analysis. So guys, I am going to begin with this, the first point in our agenda, that is the S&P 500 technical analysis on the weekly chart. So guys, now we are going to discuss the first point of our agenda, and that is the S&P 500 technical analysis on the weekly chart. So guys, one more thing, that because this technical analysis, it will be a bit lengthy, so I have made these the sections in this, the S&P 500 technical analysis. Whichever section you want to watch, you can watch. Whichever section you want to skip, you can skip, or whichever section you want to rewatch, you can rewatch. So these are the sections in this, the S&P 500 technical analysis. So although guys, okay, I always recommend to watch this, the entire S&P 500 technical analysis, because there is a tons of information that you are not going to find anywhere. So that is the reason, and also each and every section is related to the other section. That is why you are recommended to watch this, the entire S&P 500 technical analysis. So it contains a tons of information, a lot of information. So guys, now let's do this, the S&P 500 technical analysis on the weekly chart. And guys, once again, if you're not subscribed to the channel, then please subscribe the channel. And also, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then I have given the link in the description of the video and also in the comment section. So guys, on this the weekly technical and on this the weekly chart of the S&P 500. So let me write it down. Weekly chart. W as in weekly. So when I say weekly, weekly means that one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week, right? So first comes the candle itself. This is the candle. Now when you look into the candle, then it's a bull candle. No specific pattern, no specific form of the candle, but just a bull candle. Because there is no specific form or no specific pattern of this, the bull candle. This means that we can simply anticipate that because of this, the heavy bull candle, we can anticipate that there will be some bullish sentiments that will be carried forward to Monday. See, because there was a long weekend, Thursday, Friday, Saturday, Sunday, right? Because of that, okay, I'm not confirming that there will be a gap up open on this, okay, on Monday or not. Because whenever there comes a long weekend, then sentiments can change overnight. Sentiments can change overnight, okay, generally on this, the long weekend. That is why I'm not confirming that we are going to see a gap up open. But if this would have been a normal week, in that case, yes, so there were like, some chances, 70 to 80% chances of seeing a gap up open or an upward movement initially on Monday. There is one more significance of this candle, and that significance is that the high of the candle was 4034. It was 4034. It was below 4035 and the zone of 4035 itself. So the previous candle that was formed means last week, again that candle was a failure. Okay, again this candle is a failure. Two successive weekly candles failed to cross the zone of 4035. That is an indication that the market means the market is struggling. The stock market is struggling. The S&P 500 is struggling to move up. So the struggle is in the bullish side. So it is struggling to move up. And again, to my community members, okay, I'm telling them, okay, this particular thing, okay, that see, this is the thing, we have this the 4035 and this is the problem, okay, means all of these things. So I'm constantly reminding them and I'm keeping them posted, okay, what is happening in this the 4035. So this is a problem. This is a problem for the entire stock market. So that can give a potential reversal if on Monday, if the S&P 500 fails to clear the zone of 4035. Now guys, let's do the technical analysis on this, the S&P 500 weekly chart. So in this, the technical analysis, first thing is this, the Bollinger Band. This is the upper band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band and the median, this means that the S&P 500 is bullish through the Bollinger Bands. Clear? Right. Now let's talk about the moving averages. Because there is no clear fan out, in the moving averages. Secondly, the S&P 500 has closed above these, the moving averages. This means that the moving averages are neutral. Because there is no clear fan out supporting the bull trend. It is, see, the movement of the moving averages is still supporting the bear trend. But because the S&P 500 has closed above all of these, the moving averages, this means that it is bullish. So bearish through the these the so bearish through the pattern but bullish through the closing. This means overall moving averages are neutral for the S&P 500. This means the S&P 500 is neutral through the moving averages in simple words. Now, then comes this the Ichimoku cloud. So when you look into the Ichimoku cloud, the S&P 500 it is trading below the Ichimoku cloud. This means that the S&P 500 is bearish through the Ichimoku cloud. Simple. Okay. So we have seen these things. Now comes some other technical indicators. So some other technical indicators, when I say, first thing is the moving averages. Sorry, first thing is this the MACD. MACD is more than the signal, or MACD is trading above this the signal. This means that the S&P 500 is bullish through the MACD. However, both MACD and the signal both are negative. This means that in this when we look into this the broader picture, the MACD is still bearish, means the S&P 500 is in the bear trend, is still in the bear trend, because the MACD and the signal both are negative. Now comes the stochastic RSI. Stochastic RSI, the K channel is more than the D channel. Clear? K channel is more than the D channel. This means that the stochastic RSI is bullish. Stochastic RSI is bullish because the K channel is more than the D channel. Right? Now there is a problem. The problem is that next week, if there comes a gap up open or a flat open, or if the S&P 500 try to move up, and if it is hovering around 4035, in that case the K channel of the stochastic RSI will become 100. And what happens when it becomes 100? There comes a reversal. The only case it will not come down if there comes a bullish breakout. That's it. If there comes a bullish breakout, then it will be able to survive and it will not come down. Okay. And also we need to see whether it will be absolute 100 on Monday, or it will be like 99 or 98. 98, 99, that will not create, this is the problem to the S&P 500. But absolute 100, it will create the problem to the S&P 500. Okay. As of now, S&P 500 is bullish through the stochastic RSI. Then comes the divergence. So divergence is normal as of now, not a problem. Okay. Then comes the volatility. S&P 500, the volatility has come down, okay, but still it is more than 90%. This is the all-time high levels. This is the volatility levels. And guys, there are some other technical indicators. So these are the part of my research. Okay. So because we have recently seen, okay, a very heavy this the manipulation in the stock market and the entire stock market, and this S&P 500. Okay, it was not that easy to trade during the manipulation. That is why, okay, I'm doing some more research. So these are just some examples. There are other technical indicators that I'm using, okay, in my research, and to make sure that in order to make sure that even in the manipulated environment, okay, we should be able to trade comfortably, okay, without any problems, and my YouTube community members should be able to make money, okay, even in this the manipulated this the movement, this is the manipulated environment in the stock market, right? But soon there will be some breakthroughs and we will be able to trade even in the heavily manipulated these are scenarios. So it will be like the trading, okay, all around the year, 12 months, okay, without any problems, without any more losses, or any okay, any such thing. Anyways, so what we have noticed is that through the technical analysis, that the S&P 500 is bullish through the Bollinger Bands. S&P 500 is neutral through the moving averages. S&P 500 is bearish through the Ichimoku. S&P 500 is directionally bullish through the MACD, but on the longer time frame, okay, we will consider the MACD is it is neutral, because the MACD is the MACD and the signal both are negative. This means neutral. S&P 500 is bullish through the stochastic RSI, right? And it is divergence is neutral, normal, okay, not a problem. Volatility is more than 90%, okay. So what we can conclude is that overall, okay, S&P 500 is almost either it is neutral. However, when we talk about the trend, when we look into the trend, because the S&P 500 on the weekly chart is trading below the Ichimoku cloud, it is still in the bear trend. It is still in the bear trend. Long-term trend is bearish, right? Now let's discuss the Dow Jones. So that is the important thing, okay, that I wanted to discuss. This the Dow Jones. Why the Dow Jones? Okay, it is important. The reason is that so the Dow Jones has become this the important because After 2 years, we have seen this the bear trend in the entire stock market, right? It was from the month of May till November, May till November. Okay, almost 6 months. So it was in the bear trend, the long-term bear trend for 6 months. It was in the long-term bull trend for 2 years, 2 years, 6 months. Okay, now there is a breakout. There is a breakout. Okay, from this the Ichimoku cloud. So Dow Jones has closed in the bull side of this the Ichimoku cloud. Also, there is a crossover in the moving averages. All of the technical indicators on the weekly chart of the Dow Jones is indicating a bullish trend. This means as of now we can say that the Dow Jones is in the long term bull trend. However, in order to confirm, we need to wait for the second candle, the second weekly candle. Okay. So once if that candle also forms above this the Ichimoku cloud, in that case we can say that yes, the Dow Jones is in the long-term bull trend. Now this statement that the Dow Jones is in the long-term bull trend. When I say long-term bull trend means for the months, for years. Okay. As of now, considering these the factors, overall factors, the companies okay have posted bad earnings, inflation, okay, the economy is slowing down. Okay, these factors are not supporting any long-term bull trend. A short-term bull trend, not a problem. It was Dow Jones was heavily manipulated, very heavily manipulated that we have not seen, in last many months, okay, or in this the years. Okay, so Dow Jones was very heavily manipulated. That was the reason Dow Jones was able to breach this the Chimoku cloud, and it is now looks like okay, it looks like that it is in the long-term bullish trend right now. If you notice that the S&P 500 is still lagging behind, S&P 500 is still bearish on the weekly chart. Okay, this means that in the long term S&P 500 is still bearish. Even in these the 6 months S&P 500 is bearish. For 2 years, for these the 2 years, okay, S&P 500 was bullish along with the Dow Jones. Okay, so generally what happens is that all of these indices they work together. Okay, if there was the a bull trend for 2 years, this bull trend was for the entire stock market, for the Dow Jones, for the Nasdaq, and for the S&P 500. It was not just for only the Dow Jones. No, it was for the entire stock market, right? This time, this is different. That the Dow Jones is in the long-term bull trend. It appears to be. It appears to be. Okay, again, it's not confirmed. It appears to be. Okay. So, to me, it is most likely a trap, a wonderful trap, or a perfect trap. Okay, because even these the experienced traders, okay, or these the technical, okay, these the technical traders, okay, they are going to find themselves trapped in this movement, right? Because whenever there comes a trend change, that trend must change in all of the indices. That is where, that is the key, that is the key. Okay, that is what you must okay, you must be very well aware of. If you are thinking about a long-term bull trend, that's not a bad thing. Okay, a long-term bull trend is good for next 2 3 4 5 years, provided so the entire stock market will be in the long-term bull trend, provided that all of the indices, the big indices, the Dow Jones and the S&P 500 and the Nasdaq, when all of the big indices are in the long-term bull trend. But when we look into the S&P 500 and the Nasdaq, these two are still lagging behind. These two still are bearish, still are in the bear trend. The only index that is in the long-term bull trend is the Dow Jones. That is why I'm calling it as a trap, a perfect trap, where not just these the retail traders, okay, but these many of these, the experienced traders, the technical traders, okay, they are going to be trapped, because now they are going to think that it is in the long-term bull trend. They will plan their these trades, okay, to enter into the market, enter into the stock market bullish. Okay, but soon, because if there comes, okay, there's the failure in the S&P 500 and the Nasdaq, okay, in the bearish side, then there will be a resumption of the long-term bear trend that we call as a recession. Okay, for example, UK economy is in the recession, right? So a technical recession will be there when on the monthly chart, okay, that I will show you in the next part. On the monthly chart, when the moving averages cross over, right? So as of now, I'm not calling it as a perfect this the bullish trend, and I will not advise, as of now I will not advise anyone, okay, to go bullish. Rather, I will advise to wait and watch until the S&P 500 gives you a breakout, okay, from this the cloud, from this the Ichimoku cloud. Secondly, the Nasdaq gives you this the breakout from this the Ichimoku cloud. So now I hope that you are that this the picture is clear, that although it appears to be that the Dow Jones is in the long-term bull trend, but through the technical data, through the data that is published by the institutions, including the Feds, and other than that, the data from the companies have posted bad earnings. Okay, overall, this is a slowdown in the global economy. This is not supporting any this the long-term bull trend. So technically, it might look like okay a long-term bull trend, but until and unless the S&P 500 and the Nasdaq, okay, they supports this the same thing, there is no long-term bull trend. Simple. So now guys, this was the S&P 500 technical analysis on the weekly chart, and I hope that the big picture is clear for you, that there is indeed a short-term bull trend, but this short-term bull trend is in the long-term bear trend, right? Long-term bear trend and the short-term bull trend. Now, so what it means by the long-term bull, this the long-term bear trend and this the short-term bear trend. Okay, let me clear this concept for you. Okay, so this means that this is the long-term bear trend. This is the short-term bull trend. This is the long-term bear trend. This is the short-term bull trend. This is the long-term bear trend. This is the short-term bull trend. This is what I mean, right? This means that as long as and if you notice that the Ichimoku cloud, okay, this cloud is broadening. Okay, this the distance, okay, between these the two parts, okay, between these the two the bands of this Ichimoku cloud, okay, it is increasing. It is further confirming that we are in the bear trend for many months, for these the coming months. Until and unless you see a breakout, there is no bullish movement. There is no long-term bullish trend. Okay, so this is what I mean by the long term. So the long term bear trend and these momentarily the short term, these the bullish trend. So see, the short term bullish trends are going to give you an opportunity. These the short term bullish trends are going to form a lower high in the stock market, lower high. And what we do on the lower high, we short, we go bearish. This is a perfect opportunity to go bearish, because what happens after these the lower highs, okay, these lower highs have formed in the stock market, okay, particularly in this case of the S&P 500. On the lower high, you will sell. When it comes down, it forms a new, this is the lower low, you will book your profits. It moves up, it will form, okay, again a lower high, again you will short. It comes down, it will form a lower low, you will book your profits again. This is the natural movement of the stock market. This is the natural movement of any index like S&P 500 or the Dow Jones or the Nasdaq. Now guys, let's move on to our the second point, okay, in our agenda of this the S&P 500 technical analysis. And the second point is the FOMC consolidation and the breakout. Now guys, we are going to talk about the second point of our agenda of this S&P 500 technical analysis, and that is the FOMC and the consolidation and the breakout, right? So guys, before I proceed, okay, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that guys, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then I have given the links in the description of the video and also in the comment section. So guys, as we all are aware of this, the fact that the inflation was 7.7. The CPI data that was published, okay, it was 7.7. Now this 7.7, it was 6% less than the previous inflation, that was 8.2. And that was the reason we have seen a very heavy intraday movement, like 5.5% upward movement in the S&P 500. On the same day, it was 3.5% in the Dow Jones, and I guess more than 7% in the Nasdaq. Okay, so this was the result of this, the CPI data. This is the inflation, right? Now, when we look into this, the FOMC that was recently published on on this the Wednesday. Okay, so why it was significant? See, it was significant because when we look into this, the movement of the index, movement of the S&P 500 and the Dow Jones and the Nasdaq. So that movement was, this movement was very much confined. This movement means we were expecting a breakout. We were expecting a breakout, like very heavy upward movement or the downward movement based on these the comments. Okay, but there was nothing. The S&P 500, it tried to move up, but it failed to breach the zone of 4035. Okay, that was another. This was very significant. Okay, even with the FOMC, it failed. Now So there was no, there was no, this is the significant movement. So like what exactly was there in the FOMC, that we are that we are talking about. So I have given this the third update to on November, on this the Wednesday, to my YouTube community members, and I've told them that, see, this is what I found from this the FOMC minutes, So this was the link there. So the facts, the first thing is that the FOMC indicates that the Feds are not going to stop the rate hikes. This was very clear. This was very much clear that the Feds are not going to stop the rate hikes. They will be increasing the rates continuously. Now the second point was that they can think on they can think of slowing down the rate hike. So earlier, it was 75 bps. Now they can go for the 50 bps. Means the rate hikes will be there. They are not going to stop these the rate hikes. They are further going to slow down the economy. If you are not aware about, or if you are not if you do not know about the rate hikes, the impact, that I've mentioned many times in my S&P 500 technical analysis, then in layman terms, in simple terms, whenever the Feds they raise the interest rates, it slow down the economy, it slow down the economic activities, and it makes everything costlier, because whenever the rates are increased, whenever the Feds they increase these the rates, this means that your loans are getting costlier. And if you notice that what we have seen in this, in this 2020 and 2021. So what was there in 2020 and 2021 that has helped the global stock markets, the entire stock market, to move up heavily for 2 years? What was the reason? The reason was, there were two reasons. Number one, the rate cuts. That the Federal Reserve, so see, the benchmark is 2%. The benchmark inflation, it is 2%. And so earlier, so whatever, so whatever was the rate, before this the COVID, so the Feds, they went for this the rate cuts. So there were the rate cuts. So Feds were simply cutting down these the rates. Now we have the rate hikes. Earlier these were the rate cuts. Rate cuts means that the loans will be easily accessible. The loans will be cheap. You can go to the you can go to the bank, or you can go to any financial institution. First of all, you will get the loan. Secondly, you will get, there's a loan on the very low interest rate. It was attractive. Second thing was, there was the stimulus package, to all. So that was the result. So a very steep, very straightforward, bullish movement for 2 years, almost 2 years. And when the Fed say that enough, now the inflation is moving up, no more stimulus, and we are going to increase the rates. So earlier rate cuts, now the rate hike and the stop, this the stimulus. That was the result. So that triggered selling in the stock market. So earlier these two factors were there to push the stock market up. Now these two factors are there to bring the stock market down. So now I hope that you understand this, the meaning of the rate cuts, the rate hikes, etc. So that is the reason. No stimulus and then the rate hikes. So these two factors are triggering this is the selling in the stock market, and that is the reason in my in the first point of our agenda of this S&P 500 technical analysis on the weekly chart. I've told you and I've shown you that there is a trap, a perfect trap, a beautiful trap, that is out there in this that we are seeing in this the Dow Jones. Perfect trap. So because of these things, now then the next thing that I've told to my YouTube community members is that the FOMC minutes also confirm that the inflation is still not under control, and Feds are very much concerned about this. So although they are planning to slow down the rate hikes will be there. They are going to slow down the rate hikes. Means from, let's say, from 75 bps to 50 bps. But the Feds are still fearful of this, the inflation. Now when we look into this, the minutes of the meeting, so this is the FOMC, Federal Open Market Committee. Then this was this was chaired by this is the chairman of the Federal Reserve, vice chairman, etc. So there are a lot of things, discussion, open market operations, and all of these staff review on the economic situation. So in this just one para, what we are seeing is that what the committee has discussed, that the real GDP of the US has increased at a moderate pace in the third quarter after having declined over the first half of the year. Okay, just a moderate. Okay, this is the increase. Labor market conditions remain quite tight. Okay, then the consumer price inflation, okay, as measured by the 12 months percentage change in the price index for personal consumption expenditure PCE, remained elevated. Right now, other than that, you must focus on this part. Consumer price inflation remains elevated. Total PCE price inflation was 6.2% over the 12 months ending in September, and core PCE inflation, which excludes change in the consumer energy prices and many consumer food prices, was 5.1% over the same period. And the SNAP's Common Inflation Expectations Index, which combines information from many indicators of inflation expectations and inflation consumption, was little changed in the third quarter but remained above pre-pandemic levels. Right? So, and then the real PCE rose modestly in this the third quarter. And when you look into some this the financial situation, other thing, the Feds have clearly mentioned that the inflation, it is still okay a concern, and other than that the economy, it is slowing down. So these are minutes of the meeting, so there's a lot of these things. Okay, so the summary is that Feds are not going to stop the rate hikes until the inflation comes under control. Okay, so when I say under control, as of now it is 7.7, right? What is the benchmark? Benchmark is 2%. Okay, currently it is 4x. 4x. Earlier we have seen that it hit the 9, so it was 4.5x. Okay, and that is why the Feds were very very much they're concerned, and 75 bps back to back. Okay, that has helped to bring the inflation down. However, technically inflation is still bullish because it is holding above the moving average, that I have clearly mentioned in my previous technical analysis. Let's see, we might be thinking that 6% inflation is good. Okay, means 6% down in the inflation, it is good. However, when we look into our technical indicators, inflation is holding bullish. Inflation is still bullish, right? So we need to wait and we need to see that what will be out there, in this the month of December. What will be the inflation, for the month of November? See, inflation is published for this the previous month. So in the month of December, the inflation will be published for the month of November. So we need to see that what is happening, in this the month of November, etc. Okay, and these all other things. So again, guys, inflation is bullish. Feds are concerned. Rate hikes will be there. Economy is going to slow down, right? That is why the breach of the Ichimoku cloud by the Dow Jones on the weekly chart is a perfect trap. As of now, it looks a perfect trap that is out there, right? No long-term bullish. As long as so once all of the indices, S&P 500 and the Nasdaq also breaches the Ichimoku cloud on the bullish side on the weekly chart, then only we will say that yes, now everything is in the long-term bullish trend. But as of now, it is the Dow Jones that is in the bull trend. Otherwise, the S&P 500 and the Nasdaq are in the bear trend. That is why I am repeatedly calling it as a perfect trap. Okay. So, guys, this was with this the FOMC that we have seen. Now, other than this, the FOMC, now comes the consolidation. Now, the question on this, the consolidation. Okay, the consolidation earlier, we have seen that there was no movement in the stock market, and the stock market, it was quite predictable. Okay, because the stock market means the Dow Jones, the Nasdaq, everything was just holding. Okay, this was very much predictable, and every day I was telling my YouTube community member that see, this is happening, we will see a gap down open, gap up open, and my YouTube community members, they were making money, every day, even though it was a little money because there was a little movement, but every day, it was predictable. Also in the recent week, it was predictable. So there was means no such surprises. Now, so this is the consolidation. Now, so there are chances that rather than coming down, we can see a consolidation. We can see that the S&P 500 and the Dow Jones and the entire stock market is coming back into the consolidation. Now, why the consolidation? The consolidation is because we are, so this is the end of November, right? Then we have time until December 19th or 19th of December. then we will see a center rally. So center rally means a bullish rally. So because we are expecting this a center rally, okay, after 18th or 19th of December, this means that we still have some time, okay, 2 or 3 weeks, okay. If the S&P 500 and the Dow Jones and the entire stock market doesn't want to come down, doesn't want to resume its the bear trend, in that case, what we can see is that the market mover, they are going to put the entire stock market back into the consolidation. Means again up down up down up down, that's it, okay, no good movement. And then on around 18th or the 19th, okay, this we will see a bullish breakout and then the center rally, right? Now, so that is so there are these the fair chances, if the market movers, okay, if they do not want to put it, okay, or if they do not want to bring the entire stock market into this the long term, this the bear trend, okay. So that is the, so there comes the chance of consolidation. Now breakout. So breakout, as in see breakout, we will see in case of the S&P 500, the breakout will come if the S&P 500 is able to breach the zone of 4035. Again 4035, 4035, the zone of 4035. Until and unless the S&P 500 is not breaching this the 4035, it will be very, so there will be very heavy or very extremely heavy chances that we are going to see this the downward trend in the S&P 500. Simple, the downward trend in the means the bear trend in the entire stock market, including the S&P 500 and the Dow Jones and the Nasdaq. Okay, Monday will be decisive. Okay, we will see that what is happening on this the Monday. So if you are my YouTube community member, then you need not to worry, because on Monday I'm going to tell you that what is, then I will tell you that what is happening on Monday and what you can do, and if there comes this the upward movement, okay, then how to trade, and if there comes up this a downward movement, then we know, okay, what is going to happen accordingly. So on this the daily basis, I will give you this the daily analysis, the daily updates of the S&P 500, right? So we will call it we will be calling it a breakout only and only if the S&P 500 is able to clear the zone of 4035. If it fails, then a bearish breakout. Simple. Okay, no rocket science. If it clears, bullish breakout. If it fails, bearish breakout. No rocket science, clear, nothing else. So guys, this was the second point in our agenda, the FOMC, the consolidation and the breakout. Now guys, let's discuss the third point in our agenda, and the third point is the support and resistance levels for the S&P 500. Let's see what will be the probable movement, okay, means what will be the zone, what will be this the expected zone where we can expect the S&P 500 to trade, okay. So S&P 500 will trade, okay, in this the particular zone. So guys, before I discuss the third point of our agenda, that is the support and resistance levels for the S&P 500, I have this information to share with you, that if you want to get the daily analysis of the S&P 500, then you can join my YouTube community. Now guys, whenever you want to join my YouTube community, then you need to scroll, okay, and on this the technical analysis itself, you will notice that there is a join button, JOIN, join button. So you need to click on this the join button. So once you click on that the join button, then you will see that there is a pop-up. In this pop-up, you will notice that there are these two options, only one midweek update and all midweek update. So what is this the midweek update? Midweek update means the daily analysis of the S&P 500. Only one midweek update means the daily analysis of the S&P 500 every Monday. Only every, okay, means every Monday only. And all midweek update means the daily analysis, the daily updates of the S&P 500 from Monday through Friday, each and everything. So this is the only one midweek update. It will be discontinued from 7th of December onwards. So there will be only this the all midweek updates and some additional levels that will be introduced with some additional services. So only one midweek update, it will not be available from 7th of December onwards. So if you want to join this the YouTube community, then you can join this through the all midweek updates. Because if you notice that more than 97% of my YouTube community members, they have opted for, they have subscribed for all midweek updates, and they are getting the S&P 500 daily analysis, the daily updates from Monday to Friday, each and everything from Monday to Friday for this the S&P 500, the daily analysis or these the daily updates. So guys, you can opt for this the all midweek updates, and whenever you want to join, you are welcome. And once again, you just need to scroll this the technical analysis, and you will find, okay, this there. So you will find this the join button there, and also I have given the link in the description of the video and in the comment section. Now guys, let's discuss the third point in our agenda, and the third point in our agenda is the S&P 500 support and resistance levels. So as you know that my support and resistance levels, okay, these are extremely sensitive. Okay, sensitive means that whenever the S&P 500, okay, or the Dow Jones, whenever these indices they hit my support and resistance levels, particularly some of these are strong or the critical levels, then something happens in these indices. So most likely we see a reversal, okay, or we see this the consolidation. So as of now, considering, okay, these are the factors that I've discussed in the first point in our agenda, that was the S&P 500 technical analysis on the weekly chart that we have seen. Other than that, we have discussed the FOMC, the consolidation, and the breakout. So what we know is that on Monday we need to see whether the S&P 500 is able to breach the zone of 4035 or not. Simple. Okay. Beyond the zone of 4035 bullish, below the zone of 4035 bearish. Simple, no rocket science. Okay, above 4035 bullish, below 4035 bearish. If on Monday, if the S&P 500 is able to breach and clear and close above the zone of 4035, in that case, it will be having the potential to move towards 4110. Okay, I'm not saying that it will move towards 4500 or 5000. No, towards 4110. And what is this, the 4110? Again, a very strong resistance. It is the calculated resistance, as well as it comes from the historical data from the historical consolidation zone. Okay, so a lot of activity has happened and it has acted as very strong support as well as resistance. So 4110. If the S&P 500 breaches the 4110, then to what level? Then finally the final resting place is 4150 to 4160. That's it. This will be the final resting place for the S&P 500. Means the lower high will be formed either at 4110 or 4150 to 4160. That's it. Okay. So this will be the lower high. See, the upward movement, the bullish movement, it is limited for this the S&P 500. Okay, because of the manipulation, it has already covered, okay, a lot of distance in very short period of time. Right now, in this the bear side. So whenever so if on Monday, if it fails, means if the S&P 500 fails, if it fails to clear the zone of 4035, then it will come down. First it will find support at 3990, right? 3990. Then it will find support at 3960. Okay, this is the normal support. But then it will find very good support in the zone of 3937. What? 3937. And just this the after this the 3937, we have what? We have this the 3907. What is 3907? This is the 50% of the Fibonacci retracement level, right? After this the 3907, then free fall 3884. So this time it will be a nominal support. Final, okay, so this now comes the very strong support at 3840. 3840 is going to provide a very strong support to the S&P 500. This does not mean that the S&P 500 will not be able to breach the 3840. It will. Okay, means it will hold for some time, but then it will eventually. Then it will come down to what? Then it will come down to 3790. 3790 again a very strong support, very good support. 3760 normal, 3735, yes, 3735. Okay, it will be able to provide some good support. 3710. Then finally we have the 3675. So 3675, it will provide very good support, very strong support to the S&P 500. Below 3675 we have 3630 and then towards 3585. Okay, so as of now, whenever it comes down the S&P 500 in the coming week, and if it covers like 3675, then it will be like 9% down. So 9% will be enough. Okay, so we can say like movement in this the coming week. Okay, we can expect it from what? From 3675. See, because the next week, okay, it is going to be decisive. 3675 to 4150 and 24150. Okay, now. So that is the broad picture. Okay, now what is this the confined picture? So this the confined picture is that we can expect the movement from 4035 to again, okay, to the 3907 and to 3840. Okay, this part, okay, from 4035 to 3840. Okay, so I think that the movement within, okay, this zone, okay, this will be sufficient. This will suffice. But if there comes a heavy selling, then do not forget about 3735 and 3675. Okay, as of now, 4035 to this the 3840. any upward movement, in that case, if there comes a bullish movement, in that case it will be like, in that case it will be from 3937 to 4150. So this is what we are expecting in this the coming week. So guys, these were the support and resistance level for the S&P. Now guys, once again, if you're not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community, the for the daily analysis, for the daily updates of the S&P 500, then just below the title of this video there is the join button. So you can click on the join button and you can subscribe. So guys, this is the fourth point of our agenda, and this the fourth point is the dollar index, the bond yield, and the profit booking. So first comes the dollar index. So this is the dollar index, as I mentioned multiple times. Okay, so we are going to measure the strength of the dollar corresponding to the European currencies, okay, and the Japanese yen, and so there are total 6 currencies. Okay, so we are going to measure the strength of the dollar, okay, to these the 6 currencies. So when the dollar index moves up, this means that the dollar is strengthening. Okay, when we compare it with the other European currencies, and this the Japanese yen. Okay, and when this the dollar index comes down, that this means that the dollar is weakening. Okay, in corresponds to or corresponding to, okay, these the currencies, right? So as of now, see, and one more thing, whenever the dollar index moves up, then the stock market comes down, right? This is what we know. Other than that, whenever the dollar index comes down, then the stock market moves up. This is okay. This is again what we know. Now, if you notice in this the chart, okay, you can clearly see that the dollar index is holding. Dollar index, it is clearly holding, and on Friday it has closed above the 200-day moving average, right? Other than that, the pattern is supporting, okay, or pattern is saying that the dollar index, okay, it can still hold. If the dollar index is able to hold, and if it goes, okay, for a reversal, means a bullish reversal in the dollar index, then the stock market, it will come down. When the stock market comes down, I mean the stock market means the S&P 500, the Dow Jones, and the Nasdaq, right? So as of now it is holding, and that is a point of concern to the bulls, because if the dollar index strengthens, okay, if the dollar index, it gets some strength, in that case the stock market will lose the strength, means it will come down. Okay, this is with this the dollar index. As of now, although it is bullish, although the dollar index, okay, it is bearish, but it is in this, it is not forming this, what we say, it is not forming. So it is not forming the lower low. This is not the lower low, this is the higher low. This is the higher low, because when we look into this the weekly chart, see, we need to look into this the trend. For the trend, we need to see the weekly chart. Okay, and when we look into this the weekly chart of this the dollar index, then what we are going to notice is that the dollar index, okay, it is bullish on this the weekly chart. So now you can clearly notice that the dollar index is bullish on the weekly chart, right? This means that as of now it is going to form the higher low, not the lower low, higher low. Okay, this is still the bull trend. Dollar index is still in the bullish trend. It is just coming down to form a higher low, and then it will see again a very heavy reversal. This heavy reversal in the dollar index means the dollar index will go bullish very heavily, okay, after some time. At the same time, the entire stock market will come into the the entire stock market, okay, and this all of the indices like S&P 500, the Dow Jones, and the Nasdaq will come into what? Will come into the recession. The entire stock market, the entire economy will come into the recession when this, okay, this thing will happen. So see, this is the natural flow. This is the natural movement. Okay, so it may take some time, but when this happens, then the stock market will come this way. Now guys, this is the chart of the inflation, sorry, not inflation, this is the chart of the 2-year bond yield, the 2-year bond yield. Now if you notice in this the 2-year bond yield, what we are going to see that that the 2-year bond yield, it is also in the long term bullish trend, just like the dollar index. As of now, okay, it is seeing some as of now, okay, it is coming down, and it has formed, okay, this is the higher low, and then it moved up, and again looks like that it is going to come down. Okay, in the next few days it will find support, and then it will bounce back. This means that this further confirms, okay, our theory that because the dollar index is also going to form this the higher low, the 2-year bond yield is okay, it is also going to form this the higher low. Okay, soon there will be a resumption of this the bullish trend. This is the natural flow. This is the natural flow. So until and unless on the weekly chart the 2-year bond yield it comes down in the bear side, okay, we will not call it as like bearish. So as of now the 2-year bond yield as well as the dollar index, okay, these are bullish. These are bullish. Okay. So this is what we can clearly see through the chart. So yes, there is still some potential that it can, the 2-year bond yield, it can come down, right? And also there is some potential that the dollar index can come down. That we can see, okay, that is something that we can see intraday. Means intraday it came down and then it got, you know, some of this the reversal, right? Let's see how it goes. Okay, particularly next week, the Monday. Okay, Monday is the decide. So Monday will decide the fate of the stock market. Now comes the profit booking. So when I say the profit booking, so the concept of the profit booking, okay, particularly, okay, this is seen in this. So when I say profit booking, okay, I mean the profit booking in the Dow Jones, because it is the Dow Jones that was heavily, not heavily, but very, very heavily manipulated, and it was up and up, okay, against all odds, against everything. It was simply moving up, okay, and that is not the good sign. Okay, generally, okay, this doesn't happen because it is not supposed to, or it was not supposed to move up like this. Even if it has to move up, then it must follow some principles, okay, and the Dow Jones has simply defied those principles, and it moved from 29,000 to 34,000, 5,000 points. Now it has to shed these, okay, no, I'm not saying 5,000 points, but at least 2, 3 or 4,000 points, okay, it must shed. So this was because of the manipulation. Anyways, so the profit booking that we are going to talk about, okay, that profit booking, okay, it is expected to happen in the Dow Jones. So I will discuss, okay, in detail, okay, how that is going to happen in this the Dow Jones, okay, in the probable movement of the market in the last point of this agenda, okay, of our agenda of this S&P 500 technical analysis. But as such, what is profit booking? So profit booking, okay, it simply means that on Monday you can see that there is a gap up open, upon gap up open, and upward movement, immediate upward movement, okay, then you will see that the Dow Jones, okay, it is holding, okay, at that level. Now when the other these are people, the retail traders, okay, and everyone is convinced that now it is bullish, then the retail traders and everyone will come to buy. When the market movers, the market manipulators, they have seen this the significant, okay, volume, then they will drop, means that they will sell, and because of that selling we will see a very heavy drop. Within a day we will see a very, very heavy drop, okay. So that is how the profit booking it happens. So why we call it as the profit booking? Because they have manipulated the market, they have gone bullish, okay, they have driven the stock market, they have driven the S&P 500 and the Dow Jones to these levels, to these the highs, okay. So that is the reason, okay. So they were bullish, and now they need to exit their position. Whenever they will exit, they have to dump, they have to sell. Whenever they will sell, so they will be very, very heavy. This is a drop in the entire stock market, right? So that is the first form of this, the profit booking. Now the second form is that there will be a gap down open, a good gap down open, and immediately upon this the gap down open, then we will see that the entire stock market is coming down. Means no one will get any chance to exit. There will be such a heavy fall in the stock market, okay. Or you can think of, like, something like this, okay, a very heavy fall where no one is going to get any chance, okay, and then they are going to sell each and everything, right? This is how this the profit booking, okay, it happens. Now guys, let's discuss the fifth point, okay, of our agenda, and this the fifth point is the S&P 500 technical analysis on the daily chart. Let's see how the S&P 500 is doing on the daily chart technically, again technically. So guys, now we are back to this the S&P 500 chart, and now we are going to discuss the fifth point of our agenda, and the fifth point of our agenda is the S&P 500 technical analysis. So guys, once again, if you're not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to get the daily analysis, the daily updates of the S&P 500, then you can join my YouTube community, and you can simply see this, that there is this the join button. So this join button is there just below the title of the video, and you can click on this the join button in order to subscribe, or in order to join my YouTube community. So guys, now this is the S&P 500 technical analysis. So the first thing that you are going to notice, okay, or that we are going to talk about is the candle itself. This is the candle. This is a very, very small candle, very, very small candle, okay. and the shape is okay, even though it looks like a hammer, but it is so small that we cannot count it, we cannot count, okay, it as a hammer. Okay, other than that it is a significant of this the bullish movement. Okay, but because this candle has failed to breach the 4035, okay, again, so overall we can simply neglect the candle. Okay, even though it is pointing, okay, a bullish movement, okay, on this Monday. Okay, but it is so small that we can neglect this the candle. As of now, this candle is, so this candle means nothing as such, nothing. However, when we look into these the last three candles, okay, then we come to know, okay, that these are, so there was a, this the heavy, this the bullish movement. This means that overall, yes, now there are bullish sentiments that we can see on Monday. Okay, but and how these bullish sentiments are going to work, that we will look into this the probable movement of the S&P 500, right? So guys, now let's talk about the technical indicators. So when I say technical indicators, first comes the Bollinger Band. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed between the upper band and the median of the Bollinger Band, this means the S&P 500 is bullish through the Bollinger Bands, right? Now comes the moving averages. If you look into the moving averages, clear fan out supporting the bull trend. Closing of the S&P 500 is again above the moving averages. This means that the S&P 500 is bullish through the moving averages, right? Ichimoku. So if you see that the S&P 500 has closed above the Ichimoku, it was trading above the Ichimoku. This means that the S&P 500 is bullish through the Ichimoku cloud, right? Now guys, let's look into some other technical indicators. So when I say some other technical indicators, okay, I mean this. So we have the MACD. MACD is more than the signal. Both are positive. This means that MACD is bullish, clearly bullish. Sorry, when I say MACD is bullish, I mean that the S&P 500 is bullish through the MACD. Okay, and also there is this the short-term bull trend. Then comes the stochastic RSI. If you look into the stochastic RSI, K channel is more than the D channel. Clear? This means that the S&P 500 is bullish through the stochastic RSI. Okay. However, there is a constraint that I am going to discuss in the probable movement of the S&P 500. Guys, then comes the divergence. Divergence is normal. Okay. As of now, divergence is normal in the closing prices of the candle. Simple. Then comes the volatility. Because of this, the slow or this the confined movement, we have seen that the volatility it has come down. Okay, so the volatility it has come down. Now the S&P 500 it is less volatile. Okay, as on Friday we can say that it was less volatile. What will happen on Monday? That's a different thing. Okay, because Monday we are expecting a profit booking, heavy movement, so that can simply increase the volatility, right? So and again guys, all of these, so these the other technical indicators, these are there. Okay, these are the part of my research, and I am doing this the research that how to play safe in the manipulated this the environment, manipulated market, so that my YouTube community members they can make money, they can make more money in the manipulated scenarios. So now guys, what we have seen is that the S&P 500 is bullish through the Bollinger Bands. S&P 500 is bullish through the moving averages. S&P 500 is bullish through the Ichimoku cloud. S&P 500 is bullish through the MACD. What is MACD? MACD is moving average convergence divergence. That is MACD, right? So S&P 500 is bullish through the MACD. S&P 500 is bullish through the stochastic RSI. This means that the S&P 500 is absolute bullish, and the S&P 500 is in short term bull trend. It is absolute bullish and it is in the short term bull trend. However, this does not mean that the S&P 500 is going to move up and up, because there are some other constraint, and the primary constraint is the zone of 4035. So now guys, let's move on to this the probable movement of the S&P 500, the 6 point in our agenda, and let's see how the S&P 500 is going to behave from this the Monday onward. So the Monday will be the 28th of November, okay, and then up to Friday, that will be 2nd of December. Now guys, let's discuss this the sixth point on our agenda, and the sixth point is the probable movement of the S&P 500 from November 28th, that is Monday, to 2nd of December, that is Friday. Let's see what is going to happen in the S&P 500 Monday, Tuesday, Wednesday, Thursday, and Friday. So guys, once again, you must remember some of these the important things before I tell you about the probable movement. The first thing is that the FOMC. Okay, what was in the FOMC? FOMC was confusing. Okay, not exactly confusing, but it was clear that the Feds are going to raise the interest rates. However, they can cut the interest rates. Okay, maybe like 25 bps, but the rate hikes will be there. Rate hikes will be there. No relief to the economy. No relief to the stock market. Okay. Other than that, the second thing is that the Dow Jones is trading, okay, on these critical levels. Okay. Other than that, the S&P 500, it was struggling with this the 40 or 35. Okay. So these are some of some of these the level. Other than that, the fourth point is that there was a long weekend, Thursday, Friday, Saturday, Sunday. Okay, so Friday the stock market was open, but it was open only for 3.5 hours. Okay, 3.5 hours. So there was not enough volume, and because of that, okay, we can clearly see the impact on the stock market, the S&P 500 and the Dow Jones and the Nasdaq. Right. So these are the four factors. And guys, once again, if you're not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, you want to know what is going to happen in the S&P 500 even before the open of the stock market, then you can notice that just below this the video, okay, there is this the title, S&P 500 Technical Analysis, and then there is this the join button, JOIN join button. Okay, so when you click on this the join button, okay, you will be able to subscribe and you will be able to join my YouTube community. Other than that, I have given the link in the description of the video and also in the comment section, so you can also use those links to join the YouTube community. So guys, now the expected movement in the stock market, sorry, in this the S&P 500 and the and this movement, okay, it will be most likely it will be defined by the Dow Jones. Now let's see what is happening in the Dow Jones first, and then we will get back to, okay, this is the S&P 500. Now in the Dow Jones, okay, in the beginning of this the video I've shown you that because that this what we say this is the divergence. Okay, so because this the divergence has so divergence is now 67. Okay, in case of this the Dow Jones, okay, more than 67 actually. Okay, and last time we have seen the same divergence when the Dow Jones, okay, it was on August 16, and that time the divergence was 67.75. 67.75. Okay, and the same almost this the same divergence was there on November 8th. November 8th, it was 66, not even 67, it was 66. Okay, so what we have noticed is that whenever the divergence, okay, so whenever the divergence it increases, okay, and it reaches to this the historical levels, the historical highs, then there comes this the reversal in the stock market, the reversal in the Dow Jones that has happened historically. Again, see, I'm not assuming anything, I'm just using my technical indicators, and I'm analyzing based on the technical indicators and the historical movement historically. So this means that on Monday, if the Dow Jones opens, either we see a flat open, okay, or if we see a little gap up open, then immediately we will see that it is not 67, it is more than 67, or it is even 68. 68 will be, or 60 means approximately 68, it will be like it will be catastrophic for this the Dow Jones, for the and for the all of the market, means for the stock market, because it will then make the entire stock market heavily unstable. Right, earlier it was 67.75, there was a very heavy bearish trend, very heavy bearish reversal. Now it is going to hit this the 67.75 or the 68 on Monday again. So that is the reason why I am saying that there are very good chances of seeing the profit booking on Monday. Okay, because of this. Now we know that so I have cleared the concept of the profit booking in the point number 4. Sorry, in the point number, yeah, in the point number 4 of the agenda, okay, of this S&P 500 technical analysis, that how it works, right? So now what we can expect is that on Monday either there will be a flat open, or there will be a gap up open, and immediately upon open we will see that the S&P 500 and the entire stock market is trying to move up. When I say entire stock market, I mean the Dow Jones. Okay, it is trying to move up. So what can happen is that we can see that the Dow Jones is moving up, but the S&P 500, it is holding, it is still struggling with the 4035. okay, or it has entered in the zone of 4035. Okay, because the same thing, what we have noticed is that there was very little movement in the S&P 500 on Friday, whereas there was some good movement in the Dow Jones on Friday, right? So we can see that the Dow Jones is moving up heavily. Because of that, S&P 500 is holding here. Immediately upon open, it is holding here, and it is also trying to move up, but it is struggling at 4035, right? Now when the Dow Jones moves up, then what will happen? Then this means that now it is going to form a trap. So trap means that now everyone, okay, or most of the retail traders, they will be convinced that we are now again, there is a resumption of this the bull trend. So they will then try to enter bullish when there will be some goodish, when there will be some good bullish, when there will be some good volume in this in the stock market, in the Dow Jones, in the stocks, in the S&P 500, then the market movers, the market manipulators, then they will dump. Okay, so when they will dump, then we will see that earlier S&P 500 was struggling. That was a sign, okay, it is not going to move up. Okay, and now because they have dumped, then we will see that the S&P 500, it is coming down. It is coming down to what? Initially it will hit the zone of this is the level 3990. It will be easily able to breach 3990, then 3960. Okay, not much, that, yeah, 3937. Then it will find some support, okay, at 3937, right? 3937. Now after 3937, then we have 3907, that is the 50% of the fave. Again, it is going to find some good support, very good support, but actually it will find very good support, okay, around this thing, okay, that is 3840, the zone of 3840. If the 3840 is able to hold the S&P 500, then it's good. Okay, then we can see, okay, a reversal either intraday or on Tuesday we can see a reversal, but any reversal will be then confined to 3907 and again a fall. Okay, or on Wednesday we can see that happening. Okay, if the 3840 is not able to hold, or if it is not able to, or if the S&P 500 fails to survive above this the 3840, then comes a very heavy this the downward movement. Okay, and this indicates that in the next week itself we will see that the S&P 500 is coming down to 3735, okay, and then 3675, right? So this is the first point, okay, where we are seeing the profit booking, and profit booking means either a flat open or a gap up open, and immediately upon open an upward movement that will be used to trap these the retail traders, and then after holding, okay, this the upward movement, okay, these levels, okay, then the market manipulator, they will simply dump, right? So that is one thing. Now because the American market will open after the Asian markets and the European market, right? Asian market and European markets are already trading at very, like, they are very unstable as of now. Asian and the European markets are very unstable. What it indicates? This indicates that if the Asian markets and the European market gives up means a bear movement. Okay, before the open of the American markets on Monday, okay, means we can expect the profit booking in the Asian markets and the European market, okay, on Monday. If the profit booking happens in the Asian and the American markets, Asian and the European markets, even before, okay, and then the American market open, this means that there will be a gap down open, a good gap down open. A good gap down open means that we can again expect a profit booking, means there will be a heavy fall. There will be a heavy fall. Okay, now where it will come down? So it will come down to the 3907 again. Now the question is, see again, see, so this, okay, yes, so this is where the market movers, the market manipulators, okay, they can book their profit. Now in case of the S&P 500, if the S&P 500 survives above the 3907, then we will have to look into this the Tuesday, Wednesday, etc. If on Tuesday and Wednesday also, if the movement is in between 4035 and 3907, guys, again I repeat, if up to Wednesday, if the movement is in between the 3907 and the 4035 and 3907, okay, in that case most likely the entire stock market and the indices will be back into the consolidation. And what is consolidation? Just the up down between two levels, that's it. Okay, nothing else. Then the entire stock market, including the S&P 500 and the Dow Jones, will remain in the consolidation until, okay, there comes the Santa rally. So Santa rally will be around this the mid December, 18th, 19th, okay, December. So we will see a bullish breakout, and then okay, we will see an upward movement. Okay, so again we will have to wait. So this means that for next 2 to 3 weeks the entire stock market, okay, it will be in the consolidation. So again, if you are my YouTube community member, then I will confirm and I will tell you whether the S&P 500 is or will remain in the consolidation, or it is going to break out. Okay, break out in the bear side. Okay, so we need to be very careful, because on Monday itself, okay, if there comes a profit booking, then only we will come to know, okay, that what we can expect or what will be most likely there. Okay, so profit booking will tell us, okay, what if the S&P 500 is able to survive above 3907, okay, or if it breaches, then again, then there is no consolidation. If the S&P 500 breaches 3907, then no consolidation. Simple, right? Consolidation will be only and only if the S&P 500 remains in between 3907 and 4035. Okay, that's it. Bear side, I've told you this is going to happen. Now on the bull side, if on Monday, let's say if the okay, even means if the market movers, if the market manipulators, okay, they do not want to give up and they do not want to book their profits, and even though okay, it is trading at the saturated historical saturated levels, they still want to move it up. Okay, in that case, what will happen? In that case, we can expect the S&P 500 also to move up to what? To 4065. Means it will be able to breach the zone of 4035. It will be able to hit this the 4065, and then comes the 4095 and 4110. Okay, 4095 and 4110. Now what? Sorry, 4090, not 95, 4090. Now what is there is the okay around this the 4090. There is the trend line. There is this the trend line, a golden trend line. Okay, so even before the S&P 500 can hit 4110, okay, it will be seeing the 4090 or just below that. Okay, so guys, I will confirm you, okay, through my community notes on Monday, that where exactly we can see this trend line, okay, on Monday or on Tuesday or on Wednesday. Okay, and once it hits this trend line, then confirmed reversal. Okay, either intraday or long term, there will be a confirmed reversal. Okay, so you can go bearish, okay, at that point, and once it breaches the zone of 4035, then you can go bullish. Okay, and then up to this trend line bullish, and when it hits that trend line, then book your profits and then re-enter at bearish, re-enter as bearish. Okay, and then book your profit this side. Means up and down you are going to book your profits 2 times, right? So again, through the community notes, okay, I will tell you, okay, how we are going to achieve this thing. So on this the bullish side, we know that up to this a 4090, and if it breaches this the trend line, chances are very less. Then we have 4110, and at most the final resting place will be 4150 to 4160. That's it. Even with the bullish breakout, even with the heavy breakout, even with the heavy anything XYZ, that is the final resting place. It is not expected to breach, because what is that? This is the historical consolidation zone of the S&P 500. Billions, not billions, hundreds of billions or trillions of dollars were there traded. Okay, trillions of dollars were traded in the zone. So it is not easy. Even with the manipulation, this is almost impossible to breach in one go. Okay, this particular zone. So it will be respected, and no, not beyond this, because beyond this, okay, that will be a different picture, right? So as of now, in the coming week, okay, this is what we can expect. Okay, now again, on Monday we need to wait and we need to see where the stock market, the S&P 500 is going to open. Based on that, we will come to know. So if you are my YouTube community member, then I will give you the pre-market update before the open of the stock market, before the open of the S&P 500, and I will tell you that what is most likely going to happen, whether we are going bearish, whether we are going bullish, or what are the chances of seeing this the consolidation. Because on that Monday we will come to know what was happening or what has happened in the Asian and the European markets. Okay, if the Asian and the European market holds, in that case we can see an upward movement. Okay, and the potential trap, and then a fall. Okay, if the Asian and the European market gives up, then a heavy gap down open immediately upon gap down open. Okay, a fall. But if the bullish sentiments, okay, bullish sentiments can try to hold the stock market, the S&P 500, for like 5-10 minutes, okay, or maybe 2 minutes. Okay, so I will clear this picture. Okay, this picture will be very much clear just before the open, like 1 hour before the open. So I will give you the pre-market update, okay, on this the Monday, to my YouTube community members, right? So guys, once again, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And if you want to get the sensitive update, these the most critical updates, okay, of the S&P 500, then you can join my YouTube community. And again, in order to join my YouTube community, so just below the video, you will see that there is a title. And just below the title of the video, you will see that there is this the join button. So when you click on the join button, then you will be able to subscribe and you will be able to join my YouTube community. So guys, hit like if you have liked this video, and if you have any question that you want to ask, then you can ask your question through the comment section. Okay, so you can write your comment. So guys, this was my S&P 500 technical analysis for the week of November 28th, 2022. That is from November 28th Monday to December 2nd Friday.